Aloha, this is Joshua Hayes with the BigWaveTrading.com update for, I believe this is what, Tuesday? I don't even know what day it is. But it's September 10th and it's Wednesday. Okay, now I'm back on track. And I want to go over today's daily action. Let's start off first with the New York Stock Exchange. The first thing you should notice about this chart is that it did sell off on lower volume, which I told you it doesn't matter if the sell-off comes on lower volume or higher volume, it'll sell off anyway. As you can see here in May, June, it started small, then picked up as it went. That's how it goes. But what is important is on rally days, you close above the previous day's volume height, and you close around the upper range. This weak close the New York Stock Exchange has, with it closing around the middle of the range and volume being lower, shows that bulls could not do much after what the bears did to them yesterday. Now I want to stick with the big cap indexes, and I'm going to go to the Dow Jones 30 and see how the Dow Jones Industrial Average did. And I barely watched the market today as I woke up at 9:30 a.m. and the market closes here at 10 a.m. So this is all being done without any CNBC BS in my head or anything else there. As you can see, this one has an ugly tail. Just like this tail on this, like what they, I don't even know what you call it anymore, but if they're near the top, they're called like shooting stars. It's a very nasty pattern where most of the intraday range, it looks like it's going to close near the high, but it closes about where it starts again. This happened after the open. There was a big rally in the Dow Jones Industrial Average, and it lost it. And it lost it going into the close. I need to pull up intraday charts for me to actually see what happened intraday. This is all being done through my software analysis, so I don't even know what happened intraday really. But let me open it up over here. Okay, so now we know what the Dow Jones Industrial Average did. Now let's look at the S&P 500. This proves that you do not need to watch the market intraday to know what's going on. Once again, another weak closing on volume that is lower than yesterday. This shows that bulls had no strength whatsoever to rally stocks. So instead of finding 10 to 20 perfect stocks out there, you might find none, or you might get lucky and find one. But right now, these big cap indexes are looking really bad. Let's look at the New York Stock Exchange. And as we see, we have the weak candle and everything. I think we've already looked at that. Now let's go to the NASDAQ. Let's see how the NASDAQ did. The NASDAQ is the outperformer and actually did put in a nice, decent hammer pattern bottom. But what happened here is that it closed below the opening. It's not really that negative since the upper range was where it closed. But with volume being lower than yesterday's sell-off, there is really nothing to celebrate here. So if you've been watching CNBC, Bloomberg, or Fox News Business today, and somebody's telling you to buy stocks that are in a downtrend, especially below the 50 and 200-day moving average, you need to remember what I told you. They go on air to sell to you. This will automatically block me from ever being on CNBC by me telling you this, but I don't care. I tell the truth. The truth is, these people go on air, tell you to buy what they are selling. And today's lower volume proves that they were just dumping on retail, or the buying was done by the retail crowd. Other indexes to look at is the S&P 600. We'll look at the S&P 600. We can see it had a very almost bullish session, but I can't see volume. I would assume that it was lower, which doesn't mean much. But what I do like what I see here as the S&P 600's relative strength line is going in a very heavy uptrend. The white line is the uptrend, while the index, like I said, I mix the indexes with the name of stocks a lot, is going nowhere. So if I just pick a random date on this chart and go to this date, in a whole from January 4th to September 10th, the S&P 600 has moved 1.30%. So it's basically going nowhere. There is no trend still to be had from this. But the relative strength line has continued to make higher highs and is breaking out to a higher high, while price is obviously moving pretty low. But price did regain the 50 and 200-day moving average, and even though it was on low volume, I have to say, this could be a positive for a short-term rally in the future. I'm going to go ahead and end it there because I'm only going to do part one for YouTube viewers. Part two will be much longer, and I'll go into my scans and I'll show you the individual charts. But that's going to be for Gold and Platinum members over. This is Joshua Hayes for BigWaveTrading.com, and I hope you learned something. Aloha.